Hi everyone and welcome to my morning report chart appraisals on Thursday the 9th of August with me, Richard Perry, market analyst at Hantec Markets. We've got a very interesting sort of consolidation that we've seen through the equity markets, you're seeing a little bit of dollar strength that's starting to come back into play once more. We had the escalation, China's response to the latest announcement of US tariffs. Yesterday we had China dollar for dollar really responding, $16 billion worth of tariffs. Tariffs of 25% on $16 billion worth of imports. The market has sort of taken that as slightly dollar positive this morning as the yuan has just sort of ticked a slight amount higher, but the dollar has sort of also ticked higher. You look at treasury yields, for example, they are not going anywhere. They are really sort of subdued. They are very much in summer trading now, and it certainly seems as though that yield differentials are not really playing out as the key driver of markets at the moment. What is playing out is this trade tariffs dispute, and we've seen, as I said, the sort of continuing ratcheting up of tariffs, but also overnight we've seen US putting sanctions on Russia as well. So it seems as though that every time these geopolitical sort of ratcheting events happen, the dollar will take a bit of a bid from that, and that seems to be the case today, where the dollar's just started to sort of strengthen once more across the majors. Nothing too decisive, but it is noticeable because we had the gold price that was slightly higher today earlier, and it's now down, for example, and that is sort of coming out through, as I said, commodities. The other key mover has been the oil price. A big, strong sell-off yesterday on oil because China's targeting US fuel imports as well, so or fuel products imports. So that hit the oil price quite hard yesterday, 3% lower on WTI and Brent crude, and that is below the 67 pivot that I've been talking about on my chart analysis in the morning report. So what we have seen is this decline in oil, and the gold price has hit back, has just come back a touch, although again I'll sort of go through the analysis of gold. It's sort of looking a bit more consolidatory, but still nothing too decisive to the upside in any recovery on gold yet. But what we are looking at is mixed moves on equity markets. We had a flat close on the S&P 500 yesterday. S&P 500 futures dead flat today. Mixed market on mixed markets in Asia, and we've seen sort of mixed moves in European markets as well. Sterling is a big underperformer, breaking key levels yesterday against Euro Sterling, and again continues to the downside today on cable. So we continue to see that weakness. That is a theme, I think, that's ongoing now. So what have we got to look forward to today? Well, we've had Chinese inflation out overnight. Where are my figures? Chinese inflation out overnight and slightly ticking higher. That sort of helped to support the Chinese yuan, I think, this morning. But we're sort of moving on to this afternoon to US PPI, the factory gate inflation, expected to stay as they are on both core and headline. You can see here the core data remains in this trend higher, so inflationary pressures are still sort of pulling through in the States, but expected to remain fairly steady today. That comes ahead of the CPI, which is obviously the more important data tomorrow. Now, my chart of the day is Euro Sterling. Now, as I said, Euro Sterling has broken out through a key level. That's 90 pence against the euro. That was has been a sort of a key ceiling really in the past, well, since October 2017. So what's that, about 10 months? 90 cents has been a key ceiling, and that broke through that on a closing basis yesterday. That level in October was 9,004, which the market subsequently sharply closed lower. Now, what we have seen is this is the euro sterling being in this uptrend channel, and not only that, the the interesting factor I think I want to sort of really sort of point out today is that we've got the momentum indicators, which are now taking on an increasingly strong configuration. Look at throughout this range, the RSI has been limited to 60 time and time and time again, limited to 60. But a couple of weeks ago went above 60 towards 70, then just sort of came back within the trend channel, but then bounced off the bottom of the trend channel earlier or late last week on the Bank of England, and has not really stopped. RSI above 70, that's a really strong move. Now, initially, you could argue that euro sterling is slightly stretched on the Bollinger Bands. Trading entirely outside the Bollinger Bands is suggesting that the market is a little bit stretched near term. But I'd say using any sort of unwinding move as a chance to buy. Anything between, I think, 89, 50 and 90 big figure, I think that's a buying opportunity, because I think that would see the RSI back around that 60 point, and I think that would be ideal as a buying opportunity. That's also a breakout level, 89, 50 area, old resistances coming in as new support. So I think any sort of unwinding move is a chance to buy on euro sterling. There is a suggestion that a little bit of a rolling over perhaps, as the market has just come back from 90.30 this morning as today's high. 90.33 was that reaction high back from October. But above there, you've not really got any real resistance until you're sort of talking about the 92 area to 93. So I think that there is scope for further continuation of this trend channel higher. Politics has been a big driver of the sterling weakness in recent times, and there's no real sort of suggestion that Brexit is going to let up, certainly not in the next month or so. So I think there is still upside potential in this move, but I think that maybe, given the fact that the Bollinger Bands are a bit stretched, RSI at 72, maybe there is scope for a little bit of a near-term slip, but I think anything between 89.50 and 90 big figure is a chance to buy. So I wish you good luck in your trading today, and I will speak to you later.